Start again. Good morning, everyone. My name is Karen Short, and I'm the Staples and Hardline Retail Analyst at Barclays. Today, we're very pleased to once again welcome Dollar General to the Barclays Staples Conference. With us today, we have Todd, DG CEO, John Garrett, DG's CFO, and Jeff Owen, COO. I'm not sure if Dollar General could move the camera fast enough to pan on. We also have Donnie Lau, VP Investor Relations and Corporate Strategy. Most of you listening to this are probably pretty familiar with John and Todd, so I did want to just give a little introduction for Jeff. Jeff first joined DG as a store manager in 1992. He remained with the company for 20 years and then returned to DG in 2015 as an executive vice president of store operations. He was promoted to COO in August of 2019. So I believe this is where I hand this over to Donnie to read what is supposedly a slightly shorter safe harbor statement. Got a cup after.
Thanks, Karen. Today's comments will include forward-looking statements as defined in the Private Securities Litigation Reform Act of 1995, which can be identified because they are not limited to statements of historical fact. Such statements include, but are not limited to, statements about our strategy, plans, initiatives, goals, financial outlook, or beliefs about future matters, including but not limited to beliefs about COVID-19's future impact on the economy, our business, and our customers. These statements are subject to risks and uncertainties that could cause actual results or events to differ materially from our expectations and projections. These factors include, but are not limited to, those identified under forward-looking statements in our earnings release issued August 27th, 2020, under risk factors in our 2019 Form 10-K filed on March 19th, 2020, and in our Form 10-Q filed on March 27th, 2020, and in the comments that are made during this event. You should not unduly rely on forward-looking statements, which speak only as of today's date. Dollar General disclaims any obligation to update or revise any information to discuss today unless required by law. We may also reference certain financial measures that have not been derived in accordance with GAAP. Reconciliations to the most comparable GAAP measures are included in our earnings release issued on August 27, 2020, which can be found at investor.dollargeneral.com under News and Events. Now it's my pleasure to turn the event back over to you, Karen, and Todd, Jeff, and John.
Thank you very much. So the format for this will be fireside only with just me asking questions. Unfortunately, no Q&A given the format. So with that, I just will launch in. Obviously with 17,000 stores, you're a dominant force, not only in the discount space, but in all of retail. And so I wanted to start a little bit with the fact that I think some investors have been questioning whether or not there really is any more share for you to gain from a demographic perspective, not new store geography perspective, but a demographic perspective, because you did gain so much share in the 08-09 recession. So I wanted to get a little bit of your thoughts on this. And I think it's even more remarkable because what you're seeing on comps is not a function of price sensitivity with the consumer particularly. They're just don't appear to be particularly price sensitive. So any color on that to open up would be great.
Yeah, Karen, this is Todd. Thanks for the question. Yeah, I would tell you that we're really pleased with our positioning right now, and where we sit as we move through COVID. But even prior to COVID, and you start to think about who our core consumer is, and then also those consumers that we've seen trade down into the brand. Even before COVID, our fastest growing segment by a percentage basis was really a higher income consumer. So we were already getting, if you will, a trade down, but it was really not a trade down before COVID. I would characterize it more in that it was trial, right? We've done so much work to the box over the last couple of years with our cooler initiatives, with our NCI programs, with our digital programs. Our digital programs are reaching a whole new customer base that we knew was out there, but we, quite frankly, weren't tapping into them through the old analog way that we went to market through advertising and brand awareness. Now with digital, we're able to tap into that, and we're seeing her come into the store, and we're seeing multiple purchases. If you look at COVID, now what we've seen is an acceleration of that little higher income, more digitally savvy consumer. And what we're seeing there is not only did she come in looking for goods because she really needed it, what we're finding is that she continues to do and repeat business with us over the last few months. And that really is a testament to that box. And she's finding what she needs. She loves the prices. To your point, we're delivering a pretty strong top line in a pretty flat inflation type of an environment that we're living in. But again, I think when you think of 08, 09, and you start to think about the back end of COVID and where the economy is moving right now, with a lot of people out of work, we are positioned well. We're a retailer that does very well in good times, and we do well in bad times. When in bad times, our consumers just need us more, and even broader selection and cross section of consumers need us more.
And you mentioned in one of the group meetings that obviously we know you're gaining share because of fresh and the NCI, and I think execution is pretty widely, understood that your execution is extremely strong. But you also mentioned drug. So I was wondering if you could just elaborate on that a little bit, because that also does seem to be somewhere where you have a pretty meaningful price gap advantage.
I'm sorry, I missed the
price gap.
Oh, price gap? Yeah. So you cut it in and out. I'm sorry, Karen. Yeah. So the price gaps, if you take a look at it, we are well positioned. We're as well positioned as we've been as an organization in the 12 years nearly that I've been here. And we continue to be at parity with mass, 20% or so cheaper than grocery every day, and 40 to 44% cheaper than drug every day. And I would tell you that, many of our outside share gains that we've seen really over the last few years and continues in 2020 is really coming from the drug side of the business. That's really where we're seeing a pretty strong trade into the brand. And it's for a lot of reasons, but the main reason being the work that we've done to that box to make it relevant. And then you couple that with our pricing. She is really starting to resonate with that and making those trips to Dollar General for her everyday over-the-counter needs, as well as her everyday basics and non-consumable needs for that matter.
And then maybe actually in terms of the trade down that you did comment on the conference call, I think that was picked up by a lot of media outlets. And I wanted to see if you could just elaborate a little bit on that. And then along those lines, you talk about the survey that you do fairly frequently with the customer base. How is she responding today with the survey, with respect to the survey?
Yeah. So, if you take a look at where the customer is today, let's start there. Then we'll talk about that trade down and what we're seeing. If you take a look at it, if you dial the clock back to March and April, we as many consumable retailers, saw a surge in business, and obviously that business was directly attributable to COVID-19. And it really was the consumer trying to find and fill her pantry with everyday household needs, whether it be paper, cleaning, food products, whatever it may be. What we're starting to see now over the last, call it 2 months or so, has been this. While she's no longer doing the full pantry fill in her home, what she is doing is not letting her stock actually go down inside of her store. And she's replenishing, if you will, her stock. So if she consumes it during the week, she's rebuying it to keep stock levels high. So we're seeing that phenomenon actually happen right now. You couple that for Dollar General with the trade down we're seeing, and here's what we're seeing through our credit card data as well as our consumer work that you mentioned, Karen, is that we're seeing a little higher income consumer come into the brand. We're seeing through our credit card data, and what she's telling us is that she's made multiple trips over the last few months into the brand to buy her needs. She likes what she sees, and she's continuing to shop us. That gives us great confidence as we think post-COVID, whenever that will be, that we've got a consumer that is engaged in the brand, and it'll be up to us here at Dollar General to make sure that we continue to engage her and keep Dollar General top of mind to that consumer. That's really the work that we did in 08 and 09. We've got the playbook for that. What we've actually done is we've digitized, if you will, that playbook. It was pretty analog back in those days. And we're ready to pull the trigger on that when we believe the time is right. We just don't believe the time is quite right yet. She's still completely in a COVID phase right now. But as we get to the back end of this, and hopefully sooner than later, we'll be able to start to put those pieces out there to keep Dollar General top of mind.
Okay, that's helpful. And then when you think about, I mean, obviously you're very much in control of your destiny, and you laid out all the various initiatives that will continue to drive sales, for quarters to come. When you think of the various initiatives, maybe could you just rank order what you think will be the biggest drivers? And then I also wanted to kind of pivot onto gross margin with the same question in terms of what the drivers were and then the sustainability.
Sure. I'll start with the drivers and then turn it over to you, John, for the margin drivers. Karen, to your point, we've done so much work in that box pre-COVID, and we have not slowed down even during these few months we've been dealing with the COVID-19 pandemic that's been out there. So proud of the team. And quite frankly, when you start to look at the ranking, our cooler initiative by far continues to be the biggest sales driving initiative that we have. And I would tell you, because of DG Fresh and because of all the expansion that we've done with higher capacity coolers as well as cooler doors, we've actually turned the clock back. If you think about it, we said we were, in the 6th and 7th inning of a baseball game, if you will, before we started to do a lot of the work, and especially before DG Fresh. We have turned the clock back. We're actually now only in the 4th inning. We see a tremendous runway ahead of us there. That's why we're confident that it is and will continue to be our number one sales driving initiative as we go forward. NCI, or the non-consumable initiative, would be second. I would tell you that is a great initiative. It's been working fabulous so far. And the great thing is we've been able to take the learnings from those thousands of stores that we've already done and apply them back into the mothership, if you will, or our nearly 17,000 stores. So many items and many of the planograms. And I believe that is one of the reasons why we've had 9 consecutive quarters of non-consumable same-store sales growth. So we've been on the positive side of that even before COVID. And now with COVID, we're showing the consumer a lot there. We've got a tremendous amount of other initiatives, but BOPUS should be, and our digital initiatives should also drive sales into the future, as well as some of the Better For You initiatives and our over-the-counter OTC initiatives continue to gain momentum and strength. John?
And on the gross margin, very pleased with the performance there. Up 167 basis points this quarter, coupled with 5 consecutive quarters of growth in our gross margin. And you really can see the initiatives contributing. DG Fresh, NCI, as Todd mentioned. When you look at the key drivers for this quarter, number one is initial markups. And when you look at what's driving the initial markups, it is DG Fresh. DG Fresh is having a significant impact on taking the cost out we expected it to, and that benefit will only grow as we scale it and get the efficiencies of serving more stores from the existing DCs, as well as the sales benefit it drives. Number 2 was mix, and when you look at mix, NCI, as Todd mentioned, is having a big impact there. Not only in the NCI stores, but as Todd mentioned, as we spread the best of the best across the chain, it's really making that piece of the box very relevant. So while we certainly benefited from stimulus checks as well as just a shift of wallet as people were stuck in their homes looking to fix up the house, do something to the yard, buy toys for the kids. What we've done to that box with the rotation of goods, the just dramatic value, and the more aspirational products really made that relevant to get a big share of that business as it came in. Can't expect that kind of shift every quarter, but I think what we've done with that box really makes it relevant and sustainable to continue to drive strong growth in the non-consumables, as Todd mentioned, evidenced by 9 consecutive quarters there. The other thing within mix is you also have mix within the mix. So within consumables, you have higher margin goods like health and beauty that have margins more like non-consumables, higher margins that have been doing particularly well there, as we noted, given the not only the convenience but the significant price advantage we offer in those categories. And then number 3 is lower promotional markdowns. That's something we've been talking about for a number of quarters. And, we continue to be very targeted on our promotional activity, really leveraging the tools we've put in place. We know what really drives the incremental traffic, the incremental sales, what drives profitable sales growth. And so we've gotten very refined on the playbook for different situations on what promotional activity do. And in this environment, as we're priced right where we want to be in terms of the indexes, haven't needed to be as promotional. And so that's been the key 3 drivers. And as you look ahead, as these initiatives scale, that's the gift that keeps on giving. And we obviously have a lot of other levers we've talked about between private label expansion, foreign sourcing expansion, shrink with the completion of the EAS units and the 40% increased tagging, and then all the work the team's doing to drive supply chain efficiencies. Feel very good about the impact of the initiatives and the levers positioning us to continue over the long term, continue to put it as a position to expand gross margin while driving the top line too.
Okay, that's helpful. And then thinking about the holiday, I guess I'm curious on your views. On one hand, I could argue that, it could be very promotional, just, no real Black Friday and, Prime Day will be hitting 4Q. On the other hand, I could argue that the consumer will do anything and everything she can to make her home festive. So how are you thinking about that just from a merchandising perspective? And I guess also I would ask the same thing from an inventory perspective, because your inventories were remarkably good, I guess, this last quarter compared to some of the other retailers that we've seen report.
Yeah, I'll take the top line, and Jeff, I'll kick it over to you for the inventory discussion. If you take a look at it, we're fairly bullish on holiday, and here's why. If you think about the Dollar General consumer and even this trade down consumer that we've talked about, for us, it is more about Christmas in your home. It always has been, right? So when you think of our seasonal offering, it's about decorating your home, some small gifts for the kids or relatives. We're not the big gift giving, type of a retailer that's out there. And those retailers we don't know yet, but I think it will be a different holiday. But for those that are really geared toward, like Dollar General, for making sure that your home is festive and you have something for the kids to look forward to, even in the middle of a pandemic, I think we'll do pretty well. And that's why we're pretty bullish on our offering. And we for sure didn't cut any inventory. And I'll turn it over to Jeff, but we've actually went out and actually bought additional inventory, especially in the closeout realm. Jeff, you may want to just talk inventory.
Yeah, thanks, Todd. First of all, our team was out in front of this early on in the pandemic. So I think it's a testament to the relationships we have with our suppliers and the fact that well before COVID, Dollar General, we've been growing significantly with our suppliers. And as we talk to our suppliers daily, sometimes more than once a day, we were able to work with them and be creative about solving problems. Give you a great example. During the pandemic, we were able to stand up a SKU that we don't even carry in our assortment. And in a matter of weeks, we'll be able to bring that product in and get it on the shelf for the customer and to all of our stores. So I think that's a testament to the merchandising team's creativity and the supply chain and the operator's ability to get it on the shelf. as we look to the back half of this year, I mean, we certainly are making progress, and we're pleased with the improvements we're making along the inventory front. Certainly, we're facing many of the constraints that other retailers are, but I think it's a testament to the creative problem solving that our teams are able to come up with. And then in terms of the holiday merchandise, like Todd mentioned, same thing. Our teams overseas were out in front of this as well, and it's pretty much business as usual. And we're excited. In fact, we're able to accelerate some of the holiday merchandise into the stores well ahead of normal because of the progress we've seen in some of the sell-throughs this summer. So testament to the team collaboration, and we feel like we're in a good spot, and we're continuing to make progress on the inventory side.
Now, speaking about BOPUS, I guess maybe I'm more excited about this than you are. I don't know, but it just seems like it's such a big opportunity for you. So I'm wondering if you could just talk a little bit about what the initial test stores showed on demographics. And I know you've indicated it's not meaningful ticket driver, but obviously there is probably some benefit to the ticket, whether it's within that actual order or the customer buying something when they get to the store. So can you maybe describe, and then also describe how it actually works, like the actual model? I think it's more like a Panera Bread type of model from what I understand.
Yeah, Karen, you're right. It is like a Panera Bread type of model where if the consumer wants to be completely contactless, everything is done on her mobile device. She just walks up into the store, walks up to the 4 or 8 foot area that we have designated for these holding packages, the holding area, look up their number, grab their package, and walk out of the store. It's that simple without any contact. But let me dial the clock back. I'm proud to say that as of today, we've got right around 16,000 stores already up and running, so almost the entire chain, which is a great thing to see, even in the midst of COVID and a lot of other adversities that are out there. And I wouldn't say we're not as excited as you are. We're excited about it, but you know us pretty well. We're cautiously optimistic, when it comes to new initiatives. We've tested it, and we feel very, very confident that our consumers are going to gravitate to it, and this new consumer that I referenced earlier, because she's definitely more digitally savvy, will resonate to this type of an offering. But and I want to caution everybody, this is very early, but in the early goings, what we're seeing is a little higher basket, not much, but a little higher basket. Still a couple extra items, still 5 to 8, 9 items at the most, for the most part, right now on average. So this is different type of a buy online, pick up in the store offering than you would see at a mass retailer or even our grocery friends that are out there. These are very manageable baskets, and the shop for our employee to shop that for the consumer is very, very quick. I mean, you're talking 5, 6 items. With an average pick of, a minute or so. That would be our goal to do that. So it doesn't take a lot of time. But what we've seen early on is a couple dollar extra basket, a couple extra items than our normal transaction. I would tell you that, we're seeing a good mix of both consumables and non-consumables, which is really nice to see. Now, the interesting thing that we're seeing that we thought we would get, but we're getting even a little bit more than we thought, is as she comes in, even though we've got that quick in and out that I described earlier, many of our customers are actually buying additional items when they come in. And what they're telling us through our consumer work is, you're gathering together some of that drudgery, if you will, type items, that it's not fun to shop, but I need. And that frees up a couple minutes for me, quite frankly, to browse maybe some of your non-consumable type items. So what we're seeing is a nice tack-on sale to those that come and pick it up. And by the way, heavily weighted to non-consumables, what we've seen early on. So great to see that. We obviously like that. That's where the margin's at. But again, I want to caution everybody, we're still early days here. So we're going to continue to ensure that the consumer has a great experience, and that's really what our goal initially is, running a lot of water through the pipes, if you will, to make sure that the experience is there. So far, it's green lighted. Our customers really like it. But we'll do it the Dollar General way, and that's methodically, but do it right. And to your point, Karen, we execute here at Dollar General at a real high level on everything that we do. This will be no different.
Okay, that's helpful. And then on private label, the better for you is obviously a significant opportunity from an expansion perspective beyond, where you'll end at year end. What is the gating factor on not actually being able to roll that out even faster?
Karen, this is Jeff. Well, I'll step back and say you mentioned private brands. We're very excited about our entire private brand portfolio, and we made a lot of progress. You've heard us talk a lot about the different rebranding, repositioning. You got Clover Valley, that's over $1 billion brand for us and continues to grow. But on the Better For You side, our Good and Smart brand is our private brand in that offering. And so we're excited. We're in 6,000 stores right now, and we expect to be in 7,000 by the end of the year. And quite frankly, right now, it's space. And as we think about space and continuing, as Todd mentioned, methodically refining the assortment and continuing to talk to that customer to hear and see what she wants us to put in the assortment, continue to try things, continue to massage and manage that category, leveraging the strengths of our merchant teams. That's what's happening right now. And so as you look forward, all of our prototype buildings, so when we open and build a store from the ground up, we put the Better For You offering in. As you know, we're opportunistic on some of our real estate as well. And sometimes those formats might be smaller because we're allowed to get into a certain area. So right now it's mostly on a space basis, but rest assured we continue to refine that. And the one other thing I'll mention is on DG Fresh. DG Fresh unlocks the ability to expand Better For You in the coolers. And you've heard us talk about how impactful the coolers are. Now that we have the supply chain, and also now that we have the Good and Smart brand and other private brands, we expect to increase our penetration on private brand in the coolers as well. So I think you'll see a lot more of the Better For You offering in Dollar General stores as you go forward, both cold and in the cooler and in the dry set as well.
We're really excited about, taking that private brand penetration, that now sits in that low 20s to even greater heights with what Jeff talked about. So we're really excited about that.
Okay. Now, switching gears to the P&L, I guess retail wages across some retailers have obviously been announced at permanently higher levels. And I know this is a constant question you're always getting, and, I know the answer because you're given it all the time, but it does still come up as a concern that you'll have at some point to raise wages across the board. So wondering if you could just give an update on that. And then freight has been a big topic of discussion at this conference in particular, so at least for the back half and into 2021. So how are you thinking about that going forward?
Jeff, you want to start?
Yeah, well, first of all, on the wage front, Karen, I think you've heard us talk many times. In 2017, we invested in our store manager compensation and training to a tune of about $70 million. And as we like to say, that gift that keeps on giving, that was well ahead and a tremendous investment. And we all know the importance of a store manager. It's critical to the success of this model. And so as you've heard us talk, our turnover continues to improve. And in fact, this year at the store manager level, we're beating our record turnover of last year and really seeing turnover right now at the lowest levels that we've ever seen. So we're very pleased. We've always paid competitive wages, and I think one of the things that we're pleased to see is the number of applicants. Our pipeline for people that want to work at Dollar General is full. And so we're very pleased with that, because the thing that you have to keep in mind about this model is that the ability to grow at Dollar General in a very rapid amount of time is the number one currency and the number one attraction for folks to come into this model. And so you can imagine someone can come into a store and be a store manager within about 3-year period of time. And with the fact that we're growing so rapidly, it just gives people tremendous opportunity. And I'd also say that the other metric we look at to really determine if in fact we need to do something different is what we call our critical staffing metric. And that basically says is how many people come to work every single day so that we can provide a consistent shopping experience for the customer. And we're seeing that at record levels too. So certainly we do not take a peanut butter approach to the entire chain. We attract and retain folks in our communities the way we need to. So right now we don't see that we need to do anything different, but of course as things shift, then we'll do the same, and we'll continue to attract and retain top quality talent.
You know, and as it relates to the transportation question that you asked, I think that was the second piece of that. You know, we're seeing some pressure there as well. But I got to say, you know, we just like we talked about last year. You know, we were out in front of the transportation piece. You know, with the many initiatives that we have around transportation, the biggest for us, obviously, is standing up our own private fleet. And I'm happy to say that we've more than doubled the amount of tractors that we have in the fleet right now for 2020. And we've accelerated for the back half of the year with more tractors to get more of our private fleet moving. That is the number one way to reduce that cost pressure that we're seeing out there in many instances. So you know, the team has done a great job so far. Again, I want to say that we are seeing some of those same pressures, but we're doing all we can to mitigate them. And I think, you know, we're a couple steps ahead, especially from many of our competitors that are out there in our space.
Well, I need to be respectful of everyone on this call's time because I think we have reached the half-hour mark. So, team, thank you very much for being at the Staples Conference, and we hope that it's live next year. But thanks, really appreciate your support, and I'll join you in a couple of meetings later on this afternoon.
Great. Thank you, everybody.
Thank you.
Thank you.